Hi everyone, excited to kick this off today. I'm Jen Godderidge, the founder and CEO of Atmo, and we make decarbonization projects bankable. So we all know we have a climate crisis, and the food industry is largely responsible for it. 20% of global emissions come from agriculture, but only 4% of project-level climate financing goes into the space. So big and polluting, but there's not enough money. Why is that? Because today we have a big disconnect between large corporates, food companies, and banks, as well as farmers on the other side at the end of the supply chain. So farmers want profitability, and banks and food companies sustainability. If you look at the food company, they have more than 90% of scope-free emissions coming from their supply chain. They can't do anything about the reductions, but the farmer can. However, he's squeezed in margin and he lacks financing and incentives, so he won't do any of that. Food companies and banks are financing these emissions, so these are their finance emissions. Both of them are under pressure with legislation and voluntary commitments, but they lack scalable interventions. And that's where we come in. We have built a platform for farmers where we show them the most impactful projects to reduce their emissions, but also improve profitability. There's a management side for banks and food companies to manage their portfolio and suppliers respectively. We automatically scope interventions on farm level. We have 30 solutions with 100 solution providers on the platform. We create a business case for farmers, connect them to solution providers through a marketplace, and then feed the bank with the information they don't have today in order to de-risk these loans. We then also measure the reductions, so both banks and food companies can account for them and show them in the ESG report. So, simple example, the farmer wants to buy an anaerobic digester, 800K investment, 1% financing. He needs to shell out 40K per year for maintenance, but he can expect 121K of revenue incrementally for biogas and milk premiums. So in this case, all parties benefit. The food company creates a climate-resilient supply chain, reduces scope-free emissions. The bank increases revenue because we originate more loans for them, while reducing finance emissions, and the farmer in the middle improves profitability and resilience. So we have a bold vision of building an ecosystem to accelerate the transition, and our goal is to reduce 100 million tons of CO2 equivalent by 2030. We go to market top-down and bottom-up, so top-down with banks. If a bank has 20,000 farmers on their book, we invite them to our platform, they go through the flow, and we share back the loan requests. And we also go bottom-up directly to farmers and then connect them to financing. In terms of traction, so we validated our product with a large Dutch bank. We have right now 6 banks and 3 markets in the pipeline. We are working on 2 pilots, one with a bank and a food company. We will be soon in 3 markets, and we have 20 farmers on the platform, and we only launched 2 weeks ago. When working for PepsiCo, I saw firsthand how challenging it is for food companies to achieve these reductions, and then brought a killer team on board to bring this vision to life. They have expertise in fintech, farming, and climate. That's us. Join us in our mission to double project-level climate financing.
Thanks for your pitch, Jen. And now it's the 2 minutes for the jury questions.
Thank you so much, Claudia and Amato from Salesforce Ventures. For your initial pilots, what region, what geographies are you focused on?
Yeah, right now, Netherlands and UK.
Yeah, thanks a lot for your pitch. My name is Jan de Dreux, I'm part of BBVA Spark. So very interesting. One question is, how do you help banks with their credit scoring, credit review of the specific projects?
Yeah, the challenge is that they mainly look at credit risk, not so much at climate risk. It's to a large extent because they lack the data, and this is what we provide for them. So essentially, we can de-risk the loans because we share information on cash flow impact, but also obviously we share with them how much emissions they can reduce by making this investment. So if someone has a bad credit score, we still cannot change it, but we can share all of the other metrics that kind of will influence the decision.
Hi, Rhea Hamilton from General Atlantic, Beyond Net Zero. Just a question around your revenue model. Can you describe a little bit more detail how that works and where the value is being created and
we take
distributed?
we charge a SaaS fee to banks and food companies and also an origination fee like a broker to banks. And then we have an affiliate fee for the marketplace where we send the solution providers leads. But the main piece is the origination fee for banks.
Any more questions? Okay, time is up. Thank you very much, Jen. So, continuing with our session, let's welcome Alfred Evans, CEO of Carbon X Tons on stage. Here you go. Good luck.
There we go. What does it mean to have a low carbon economy? Well, at its core, it means there's a price on carbon. In fact, that's already the case in much of the world. Carbon markets exist in every major economy. We know they work. Regulated compliance markets have a decades-long track record of driving real reductions. They're technology agnostic, driving money to the best solution in any particular situation. And there's already nearly $1 trillion of trade in these markets. The problem is, the tradable markets aren't accessible for most people. They're highly fragmented across 85 different jurisdictions, with 8,000 individual projects issuing carbon credits. They're impossible to access for most people due to cost, regulations, and the need to set up operations in many different markets. And finally, the voluntary carbon market is delivering extremely low quality, with projects failing, reputational damages, instances of fraud, and the buyers in this market have lost trust in the market. Our solution is to put the global carbon market on-chain. We build a central bank of carbon in Switzerland, holding a reserve of regulated carbon permits from a diversity of markets around the world. And then using distributed ledger technology, we record the number of tons of the global carbon budget that we hold, and we tokenize it. Our platform allows for liquid trading, where currently traders don't have access to liquid markets, reliable offsets, and a hedging and impact tool for investing in carbon markets. Our token is the next generation of markets. And because we focus on regulated carbon permits, we're able to allow two things. We're fully collateralized, where every token is irrevocably linked to a ton of carbon, and we're able to trade at a valued market price independently set, allowing trading like a normal commodity. And because we focus on regulated markets, we're able to scale where existing products fail. We're looking at 3 deep markets: offsetting, where we offer a simple supply chain, eliminating complexity and sourcing; trading; and financial markets is our ultimate goal. Our revenue is on platform fees and off platform fees, nothing unusual there, but in 3 years, if we move 1% of the carbon market on chain, we can achieve 338 million in revenue and 500 million users. The team behind this product are long-term colleagues with decades of experience trading in the carbon markets, in climate, in fintech, and in commodities. We are raising a seed round of $2 million. Our product is ready. We have regulatory approval. We have carbon permits in our account so that we can go to market with our offsetting product and grow into the trading markets and ultimately scale into financial markets, offering a regulated tool. I'm Alfred Evans. We're Carbon X Tons, and we hope you'll join us in minting the carbon, the currency of the low carbon economy. Thank you.
Okay, let's go with the questions. Who wants to ask a question?
Petra, Inven Capital. Could you please elaborate a bit about your go-to-market strategy? Are there any indirect ways how you can get to the customers as well?
I'm sorry, are there?
So go-to-market strategy,
Yeah.
you could elaborate a bit more, direct, indirect.
We've tested the concept with commodity traders and with offsetters who like the idea that there's no integrity risk in it because you're dealing with actual parts of the carbon budget. For the offsetting market, it's a sales strategy, direct sales. and SEO optimization. There's a B2B channel for businesses who are currently doing offsetting, a B2B2C channel for retailers that offer, so we have a widget that you can put on your website to do point of sale offsetting. And then there's a B2C market, which is more of SEO optimization. For the commodity trading market, the crypto market is a market unto itself, and that's primarily digital marketing. And then our long-term goal is ultimately in the financial industry, where investors who want an environmental return as well as a financial return can hold the carbon permits for long term, getting both those things. But ultimately, it's also a risk management tool, because now you can hedge your exposure. So if you've committed to buy a certain amount of carbon offsets, you can hold them for offsetting purposes. Those are primarily sales efforts. It's a smaller population with known users. We ran this business 20 years ago, providing offsets to all these industries, so we know that population. But that's a sales effort. So it's a mix in different channels across digital marketing, direct sales, and SEO optimization.
10 seconds. Any more questions?
All right, thank you.
Will that be all? Thank you very much. Congratulations for your pitch. Okay, introducing now Rumen Yordanov, CEO of Energy Glare. Welcome.
Thank you.
Here you are.
Thank
Good
you very
luck.
much. Good morning. My name is Rumen, and I'm a co-founder of Energy Glare. So what we do at Energy Glare is we turn decarbonization and energy efficiency into an investable class of assets. And not only that, we've actually developed a comprehensive infrastructure for climate finance. Now, probably you know these numbers, but we need more than 5 trillion annually from now to 2050 to get to net zero. And out of that, 1.8 trillion annually is for energy efficiency alone. And what we've got currently is less than a third of that. And if we talk about emerging markets, it's even less. And why is that? Well, the main reason is probably because these projects are just not available to investors. And then on top of that, we've got very high verification risks, and we've got high financial risks, and the market is extremely fragmented. So what we offer here, and what we've developed, is a platform that first of all creates a common market for services and projects in decarbonization and energy efficiency. Then we tokenize each one of those contracts so we can allow for a secondary market so that we can increase liquidity. And then on top of that, we allow for third parties to build further financial instruments backed by our projects. The other important thing for us is that we track performance, verify performance, and issue carbon credits based on that. And last but not least, we have developed an AI autonomous agent that can independently carry out due diligence and energy audits for those projects. And all of that is underpinned by our smart contracts that bring trust, efficiency, and traceability. Now, we start with ESCO projects in the sectors of building efficiency, transportation, and industry. And at the moment, we work with professional investors only, and the next step is to bring in the retail as well. In the past 12 months, what we've done is launched our MVP. We have onboarded more than 10 service providers, and we've got initial agreements with major international asset managers such as Colliers International, as well as some property developers. Our team is cross-functional. Each one of us has more than 20 years of experience across Asia and Europe, and we have already track records of successful business development. So what we offer on the table is essentially digitalizing and de-risking decarbonization and energy efficiency, and most importantly, eradicate greenwashing, because in our platform, we reward verified performance only, not just promises. And the last thing I'd like to say here is that Energy Glare is not just a platform, it's infrastructure for climate finance. Thank you, and looking forward to your questions.
Thank you so much. Can you share more about your revenue model? Your revenue model?
The revenue in the very beginning is commission on each transactions. So the transactions go both ways, from investors to project in the beginning, and then after that returns over a period of time, following the ESCO model back from projects to investors, so that we're charging a commission on each one of those investors. Step 2, which we don't want to implement just yet because we don't want any barrier for adoption of the platform, but next stage we're going to have a subscription model for the users. And also we have ad revenues because we have a very focused base of users there. So every manufacturer of products or provider of services has a very good audience for ads. So essentially this is the revenue model in a nutshell. Yeah. Okay, I'll come closer.
Sure. So could you please explain a little bit more in detail, how do you actually verify the performance of the decarbonization?
Yes. So step 1, our platform has 3 major stakeholders. So one is the project managers and owners. Another one is investor. The third one is service providers. So service providers for us are different types of consultants and contractors. One of them is verifiers. So we've got these companies on the platform that are energy auditors or carbon auditors, and they're the third-party independent verifier of the projects. This is currently what we implement. And next step is, hopefully within this year, we're going to release it for users. Our AI agent that is going to do autonomously energy auditing and due diligence, so they'll be doing the verification to cut the cost as well. Yeah.
Great.
Thank you.
Time's up. Thank you very much.
Thank you. Thank you very much.
Beautiful. Thank you. Okay, don't lose any second, and let's welcome Roberto Carnicelli, co-founder and CEO of Eoliann, on stage. Big applause. Here you are.
Thank you. Okay. All right. Is the microphone working? Yeah? Okay. Good. So I will start with a very catchy phrase that said there is no person or economy left untouched by climate change on the planet. This is something that I didn't say, but an executive director of the United Nations Environmental Program said. But why is this the case? So what we saw is that in the last few decades, the number of extreme climate events, like floods, wildfire, droughts, have increased dramatically. This is due to climate change and urbanization. And those events are not only increasing, but are becoming very volatile. So it's becoming very difficult to forecast where those events will take place using historical data. And this is a problem because financial institutions and corporations that want to build resiliency, they need to have this data to allocate resources efficiently. So they need to move from a backward-looking approach to a forward-looking approach. This is what we do at Eoliann. So we develop a solution that takes on satellite observation. We are connected to 3 satellite constellations, 2 of the European Space Agency and 1 from NASA. Gather a lot of data, so morphological, topological, atmospheric data, that are used to feed AI algorithms that we develop in-house that quantify climate risk. But what does it mean, quantify climate risk? It means to quantify 3 variables: the probability of an event to take place, the intensity, and the impact of those events. This is what we do around the European continent with a resolution of 30 meters, so at an asset level granularity. We started with flood, which for Europe it's a main event, but then we expanded. We expanded to wildfire, to drought, to landslide. And we developed them together with the European Space Agency and with some next generation EU financing. And the goal is to expand the suite, so to have a one-shop-all climate platform. We started a couple of years ago, a little bit more, and we managed to close our first round and close the first commercial collaboration with some energy company like Terna, Italgas, with some financial institutions, and to have the collaboration to support us in the go-to-market with some consulting company like EY and many more. So I'm Roberto Carnicelli, I'm one of the founder and CEO, and together with Chiara, Giovanni, and Emilio, we founded Eoliann. But now we are a team of 17 people with backgrounds in physics, environmental engineering, software engineering, and so on, that we work to build a more resilient future. Thank you very much. I've been very efficient. Actually, it took me just for like 40 seconds left.
Thank you. Is your satellite data proprietary in any way? Are you launching your own satellite network? Are you tapping into publicly available data sources? And how are you able to get such granular level detail to be able to detect wildfire, for example?
Yeah. Yeah, so no, we are not planning to have our own satellite constellation. It would be super expensive, and honestly, there are so many satellites. So satellite already in orbit generates around 1 terabyte of data every day. So I think it's more than enough for what we do. So no need to do it. And in terms of, instead of your second question, which is very, very important, so what we do is a probabilistic risk assessment, right? So we quantify the risks of an event from this year in the coming years up to 2050, 2100 in different climate scenarios, right? So what we do is some variables do not have that granularity. So for example, rainfalls, but some of them actually do. So for example, what we know for the wildfire example, the ignition probability. So the type of terrain, if it contains more or less, I don't know how to say in English, I think combustible, and anyway, burning materials, we can do it at that granularity. So the overall view will have some data that are not that granular and some data that are that granular. So at the end, your estimates would be the one of the most granular data that you have. So the important is to have this kind of input that granular. And with the European Sentinel constellation, for example, we have a 10 meters times 10 meters resolution. So this enables us to get an output of that kind of granularity. I don't know if I answered you guys.
Quite a few people working in these models these days. Who do you see as your biggest competitor?
Yeah.
Risk going forward?
Yeah, it's something that is actually raising in the last few years. The main competitors that we see are ClimateX in the UK, even though they are very vertical on financial institutions. So with some energy infrastructure we're working with, their platform will not be able to satisfy linear infrastructure assessment. So, and the same will be for Mitiga. After the acquisition of Cervus solution, their platform is very rigid on what we call point-by-point analysis. So this will not allow infrastructure assessment. That's why we're verticalizing a lot on infrastructure. So after our first commercial collaboration with Terna, we expanded with others, and we saw that in infrastructure, the requirements are completely different. So quality, it's more important than quantity. And those kind of players have many models, global reach, but very low resolution. We're talking about kilometers by kilometers resolution. So this would not be efficient for an assessment on capital assessment. So we changed the approach. Few risks, high resolution, higher scope.
No time for more, Roberto.
Okay.
Thank you very much.
Thank you.
Okay, time to listen to Roberto Porter, Head of Data Science at Granular Energy. Sebastian Porter, what did I say?
Roberto Porter.
Roberto? Sebastian Porter. There you go. Welcome, thank you.
Everyone. So I'm indeed Sebastian Porter, and I'm here to tell you a little something about granular energy. And I'm going to start off with a deceptively simple question, which is, what are you actually buying when you're buying clean energy? And the answer may surprise you a little bit, because as we can't track every single electron on the electricity grid, we actually have to rely on a different system to figure out who's getting what clean energy. And this system is known as the Energy Attribute Certificate System. And the way this works is that basically a producer will issue a certificate if they've produced some clean energy, and if you're a consumer and you want to claim you're buying this clean energy, you have to buy the certificate and you cancel it on behalf of your consumption on a year-by-year basis. Now, this all sounds a little bit boring, let's be honest. But this boring market is actually worth about $30 billion a year, and it's been extremely exciting in the last couple of years for two big reasons. First of all, price volatility of these certificates has increased massively. And secondly, this year-by-year system is actually moving towards an hour-by-hour accounting system of clean energy. This brings several big benefits. Notably, it brings us much closer in line with physical reality, fosters trust in the system, which has been eroded a little bit. But it also provides a much better price signal for renewable energy on the grid. However, this is all great, but it leaves energy suppliers in a little bit of a bind, because they're stuck managing a very volatile commodity in Excel spreadsheets, basically. But they've also got a bunch of new customers that are asking for all of this new hourly transparency on their clean energy, which is where Granular comes in. We basically solve both of these problems for energy suppliers worldwide. And in terms of our actual product, it basically does two big things for these suppliers. So first of all, it allows them to optimize their certificate management today, basically, and to build the premium green energy offers of tomorrow. Now, I don't have time to go over all of our features, sadly. But in terms of overall traction, we're currently trusted by about 40 or 50 energy suppliers worldwide, in lots of markets, including the UK, North America, Japan, New Zealand, and some of these are the biggest utilities in the world, as you can tell. But in terms of actual sort of numbers, our ARR roughly increased by a factor of 4 last year, and roughly 80% of UK businesses are supplied by suppliers that are working with us. However, our incredible founding team has a vision that does not end there, because just like power markets, in power markets, well, demand response, batteries, and trading of EACs can actually take place as well if you move to an hourly system, and eventually these markets will probably end up merging, which means that you can offer all of these new services to a bunch of new players in the market, not just energy suppliers, including, for example, battery operators, which is actually something we're starting to do in the UK already. So basically, to conclude, Granular Energy offers the software tools and digital infrastructure to green energy market participants to enable them to adapt to and thrive in the green energy market of the future. Thank you very much. Any questions?
Hi, thank you. Wondering about all the other customers you mentioned in the end, like if you could tell a bit more about what value proposition you would bring to them. I've like talking about data centers, for instance, and
yeah. So sophisticated data centers are actually they'll sometimes have like power teams similar to a utility, so they would be a user of the product of our current product in a similar way. But if we talk about, for example, batteries, basically when you move to this hourly system, suddenly they can sort of trade these energy attribute certificates in a way that was previously completely impossible. And it means they can do things like arbitrage on the certificate price. And they need basically someone to help them do that, which is where we come in, basically. Either via marketplaces or also like portfolio management services, things like that.
Thanks a lot for the presentation. Can you explain what do you need to do to scale up this business and to implement your solution on a massive scale?
Well, there are actually several things that are sort of going in our favor in that sense, which is that energy certificates work the same way basically over the whole world, which is what's enabled us to be operating in so many countries at the same time. And the way you can scale this up quickly is basically by going for energy suppliers. Each energy supplier has, several thousand, tens of thousands of customers, basically, which means that we can basically, by getting a single energy supply, we're effectively gaining, 10,000 little end consumer customers in one go. Does that answer your question, roughly?
Yes, and if you want to add to that, what is the main challenge for you in
the main challenge is that energy suppliers are hard customers to go for because they're corporate behemoths which tend to move quite slowly. So, the sales cycle can be up to 2 years long, basically.
Thank you very much. Thank you very much, Sebastian. No time for more.
Thank you.
Thanks. Let's welcome on stage Robin Klemens, CEO of Kumo. Big applause. Let's warm it up for him. Thank you. There you go.
I'm Robin, CEO at Kumo, and we are creating a new product category to unlock a $1 trillion market, carbon-backed securities. There's a structural mismatch we see in tech-based CDR markets when it comes to financing. Projects are looking for 5 to 50 million on average in financing volume. And institutional debt capital starts only at 100 million, 250 million and more. We have developed carbon-backed securities to unlock this new asset class. We have developed a structure that allows us to amalgamate project cash flows into Lux SPV, and then to issue notes across a portfolio of projects to institutional investors, diversifying risk across multiple assets and increasing investment volumes. In the past 18 months, we have really identified this bottleneck. We have developed this structure, and we launched the first carbon-backed loan in history with ABN AMRO. And now we are scaling. And we're scaling with 500 million in financing volume onboarded to our platform and deep integration into tier 1 financial institutions. We issued with ABN AMRO the first loan. We've co-developed the structure with 3 banks and are now activating our multi-bank pipeline. 1 year ago, actually, we sat down with Barclays, and they said beyond the structuring, there are 2 things you can bring to banks, which is data and diligence. And ever since we spoke to more banks, and it has been confirmed and confirmed over time also for insurance companies, given that we are the asset originator, we get access to vast amounts of proprietary and high-quality data. So we can build this Bloomberg terminal for carbon markets which is currently still lacking. There's no financial data to assess projects financially. And in the combination with carbon-backed securities and the data platform, we have complementary revenue streams. We charge 2.5% to project developers on the origination and a 1% recurring to institutional investors, paired with a SaaS model on the data platform. The $1 trillion number is a big number. We've heard it several times. Also, we are waiting for carbon markets to really kick off. But what we see in the last 12 months is a 10x increase in offtake volumes from blue chip companies like Microsoft, Google, Meta, and Amazon, signing bankable offtake agreements with carbon removal projects. That's what's needed to drive debt finance into these projects. And with me and my team, I come from a product background, worked at BMW and Deutsche in their product innovation teams, and am working on carbon market solution for 5 years. Henry is a former investment banker at Barclays, and Frank builds on 20 years of experience in building enterprise-grade software products. Carbon markets is going mainstream, and it's happening now. We are going to market with a tier 1 bank in June, issuing the first 20 million carbon-backed security, have confirmed the second transaction with a second bank in the third quarter, and are activating our 500 million pipeline. Carbon or climate is a $1 trillion problem, and we are building a $1 trillion solution. Join us in creating carbon-backed securities. Thank you a lot.
Thank you. Just a question around the integrity of the data. How do you ensure that you've got high quality data?
Yeah, so we build on several data sources. One is public data, but that's available in the market and many have access to it. But in working with these projects, we run financiability assessments with the carbon project developers. And we get the projects directly from these projects on performance testing data that has been audited. I mean, financial models, it's always forecast. So there's no guarantee that's correct. But it can be stress tested with our data to ensure it's as correct as possible. And we can use then, as we go, more and more data to build better benchmarks to validate the quality of new incoming projects.
I've seen a couple other companies in this space. What makes your approach different? Why do you think now is the time? What makes today different than maybe a year or so ago?
Yeah, so if you look at other companies, there's Q8, there's Open, and there's Flow Carbon that work as similar things. We focus on banks, and in our team we have bankers, which is a key advantage. We have a pure focus on debt data and financial debt data and the carbon-backed security solutions. So that's what sets us apart. Why now is, over the past 18 or maybe 24 months, banks have gotten ready. So when we first started, just ABN AMRO as an example, there was no trading desk being able to trade carbon credits. Then they started with compliance markets. Now they can also trade voluntary carbon credits. This is true for all banks, and they're now looking to develop client-facing solutions on the trading and investment front. So that's the time where banks are ready. On the other hand, I mentioned the offtake volume. Projects are maturing, and we have technologies like biochar where there's not much tech risk left. So it's ready for debt, and hence rock weathering is also progressing. It will be the second one that can receive debt financing. You're welcome.
Thank you very much.
Thank you.
Let's continue with Francesco Amato, Business Development Manager at Latitudo 40.
Thank you. So, today our city is increasingly warm, dense, and fragile. A lot of problems. Climate crisis and urbanization, urban Thailand, flooding risk, energy poverty. But we have another problem. Deciding where and how to invest to be resilient is still too complex. Our is the first solution automated for planning resilient and low-carbon cities where climate risks meet finance. It's based on main three pillars: data from space, Latitudo 40, artificial intelligence, and Earth actionable insights and simulation, developed to help public and private leaders quickly turn climate risk data into action. We have two products. The first one is EarthDataPlace, is our digital marketplace, and EarthDataInsights is our SaaS platform. But we use also strategic urban layers for climate risk like heatwave map risks, flooding risk, and photovoltaic potential estimation. And we use also our urban simulation tool to see alternative scenarios in the future. A new concept, renewable energy communities, local groups of citizens, business, and municipalities that collectively produce, consume, and share renewable energy. 3 actors, producer, prosumer, and consumers. But why does it matter? Climate mitigation, energy equity, and social resilience. RECs turn citizens into prosumer, transforming neighborhoods into energy ecosystems. Yes, but planning them without data leads to inefficiency. Latitudo 40 leverages artificial intelligence to analyze and cross-reference urban energy, environmental, and climate data to automatically identify the most suitable areas for the development and renewable communities RECs. Our customers, mostly municipalities like Helsinki, Milano, Vilnius, Grenoble, Tallinn, etc. This is our team, 3 founders, 20 employees. We grew in 2024 50% and 100% spice and climate enthusiasts. So let's shape a sustainable future together. I'm Francesco Amato, Business Development Manager. We are in Bilbao. Muchas gracias.
Hi, thank you. Can you talk a little bit about your go-to-market strategy, who you're targeting?
Yes.
And
we
your
have two plans, 2 services, 2 products. The marketplace, where everyone can buy our analysis. You can decide where your city, your area, you can draw directly on the map your area. You can decide your layer. You can choose heatwave map risks, flooding risk, etc. Starting the task, and you will receive the data to include in your software. After 2 hours, you download the software. But if you want to use the EarthDataInsight is our SaaS platform, you can customize and see all the historical data that we have in our database of your city, of your area. It's really customized for the users. Right.
Yeah, thanks a lot. How do you monetize your solution, and can you give us some metrics of traction where you are today?
In terms of resolution, no.
Now, how do you monetize your
Yes,
solution?
with the subscribe or pay-per-use, or also a project. Subscribes and pay-per-use, we use mostly on the marketplace. You can buy directly your package per square kilometers during 1 year. And you can choose all the layers. 3 packages, Pro, Base, and Medium. And, but also you can choose pay-per-use, 1 shot, and you pay directly the dimension of the area and the type of the layers, the elaboration.
Is that all?
It is all. Okay.
Yeah, thank you very much.
Thank you too.
Congratulations for your pitch.
Bye-bye.
Thank you. Okay, let's welcome now Sophie Bruusgaard Jewett, CEO of Morescope. I hope I said it right.
Yes, it was very good. Thank you.
There you go. Thank you.
Yeah, hi. My name is Sophie Bruusgaard Jewett. I'm the CEO and co-founder of Morescope. Morescope is a tech company from Norway, and we build software solutions to really change and speed up how companies work on decarbonization. So, as many of you probably know, sustainability reporting boom days are dead. Well, at least on pause for now. And that is a really great thing for corporate decarbonization because it frees up time and resources to really focus on climate action and really focus on creating value, which is a key part of this work. Because even before the reporting regulations, companies were being overwhelmed by requests for carbon information or carbon footprint information about their products, about their own operations, and especially how they plan to manage these emissions over time. And so this was coming from investors, from banks, from owners, from employees, and especially from customers. And I've been working on corporate decarbonization my entire career, and so I know that this work is extremely difficult and time-consuming. It requires a lot of data, it requires business expertise in all areas of the business, and it requires some pretty serious Excel skills. And so I've asked myself, why is something so urgent and something so business critical still so out of reach? And that's where Morescope comes in. And we're really taking advantage of these leaps and bounds that are happening on software development due to the developments in AI to offer customers solutions that just were not possible previously. So what we're enabling for our users today is this automated, hyper-contextualized suggestions for climate actions and climate insights that are tailored to their needs. And so our decarbonization platform is able to both track, using a proprietary data model, track emissions across the whole supply chain, but also come with specific solutions based on their carbon profile. We're also able to quantify the climate impact of solutions. And so we've actually ended up solving, or at least aiming to solve the decarbonization of emissions for companies, but also the scaling up of solutions. So really addressing both sides of the problem. We saw incredible growth last year. I think we grew by almost 500% in revenue. We have a kind of standard or a classic SaaS model, so we sell software licenses. We have a large customer base, especially in Norway, but we've also started expanding into the rest of the Nordics and want to keep expanding into Europe in the year to come. The team is made up of mostly software developers and data scientists, but also some climate enthusiasts, and more AI engineers. And so, yeah, we're welcoming new investors for our Series A next year. Thank you.
Thank you very much. What's the biggest challenge for you?
The biggest challenge for us is that it's an extremely crowded space. So we are very often put in the bucket of ESG software, and it's one of the most important things that we do right now is trying to make sure that customers and investors understand how we're different. But it's a challenge, for sure.
You have an impressively large customer list. What's the average contract size, though? And how are you thinking about expanding within your customer base?
Yeah, so trying to do the conversion in my head. 20,000 euros, yeah. So, and I mean, we started off, obviously, we've only been commercial for 2 years or so. So we started out with very small contracts, trying to get pilots in, etc. But then we've also added so many new features that the upsell potential at this moment is really great. And so, yeah, the ACV is definitely also growing.
$50 seconds to go. Any more questions? Let's squeeze this time.
That means I really covered a lot in my talk.
Maybe you can use it to explain anything else that you find interesting.
I want to just say that we've really worked hard and succeeded with a partner model for how we actually sell our software. So we do, at this point, we have 30% of our revenue coming from selling through partners. So we've partnered with all the big 4 consulting companies in Norway, and we're also expanding that to new markets now. And we're also able to collaborate with accounting partners because they have a lot of the business data already. So there's multiple go-to-market channels for us here.
Okay.
Thank you.
Thank you very much, Sophie. Next and last from this session on stage, Juan Sebastian Pfeiffer Pulido, CEO of SEOS Energy Big SaaS. Oops. Careful. There you go.
All right. Hi, everyone. It's an honor to be here, being the only South American company presenting today. So we're not sexy. We're not doing carbon, hydrogen, anything like that. But we are building something more fundamental, which is solar financing, but where it's most needed, in South America. And I'll start with this. It's at 20 years behind that we are in Latin America regarding solar adoption. It's a 20 to 50 times growth opportunity that currently, of course, it's untapped. And it's not because of a lack of market fundamentals. Like we have the highest solar irradiance, no seasons to worry about, high electricity rates, low installation costs, but still 80% of the potential cells are falling through. And the reason? Lack of financing on one side. Banks don't understand yet solar financing in South America. And on the other side, installers are faced with a lot of manual work processes that, as a result, we have broken customer journeys. And that is where SEOS comes in place. We are building the infrastructure layer for end users, installers, wholesalers, and capital providers to unlock that data, get connected, and streamlining that four-way interaction to avoid these channel losses. And at the core is SEOS Studio, our agentic workflow platform that automates the critical and important processes for installers to be able to close sales efficiently, and on the other side, for financial institutions and capital providers to deploy de-risk solar loans. And we know that to do that, it's not an easy task. We have to show it can be done. So we have a two-phase approach. We had to show that we can build a de-risk solar loan portfolio as phase one of our strategy, and we've done it. Through the last 15 months, with our partnership of 65 installers, we have processed more than $7 million in solar loans. We have deployed more than $600,000 in solar loans application. And guess what? We have become the first creditor to be ever ranked above a mortgage in case of a default of a client. So that is how de-risking solar loans looks like in action. Our team, of course, we have come from the energy sector, investment banking, structured finance, fintech, and we know what needs to be done. We've built a product, and now we're scaling up. As part of this, we've built a business model built to growth, where we monetize upfront and recurring revenue with very healthy gross margins for each transaction. Right now, we're scaling up. We're raising seed equity. We have some commitments, and in parallel, we're raising debt facilities. Hopefully, here, we can get some more of you committed. And I would just want to leave this to you. 6 to 1. That's a population ratio between the global south to the north. So if we are really talking about climate, energy, and transition, we must not forget where most of the population lives in the world. So if you're bold enough to look beyond Europe and want to go solar financing, let's talk.
Thank you very much, and great to see you're attacking the financing issues. Can you talk about some of the other logistical issues as well to get this going in Colombia?
Sure. So basically, the main barrier right now is financing. What we do exactly for installers is we provide all the tools so that basically in 5 clicks, they can get pre-qualified clients with know how much it's going to cost, know ways how, like if they get approved or not. So the acquisition part of solar sales, we have automated that with agents for installers. Now, on the technical part, because we've seen some issues Australia and North America, that's where the operational agentic workflow we have. We basically review and we disperse to the installers based on milestone, ensuring that they have proper engineering, proper installation practices, and we do have some policies and standards to ensure that it's, at the end of the day, the best collateral is having a solar asset that is producing as expected for the client. So that's part of our agentic workflow that we focus on.
Yeah, thanks a lot. Can you give us some details on what's like the typical characteristics of individual loans?
Sure,
and
yeah.
Why is your default rate so low?
So in Colombia, we have been focusing what we call the small scale, which is 60–70% of the electric demand, residential and micro businesses, but multifamily. Average ticket is $8,000 equivalent. We have 0% default, and that's because we are mitigating from the origination. we make sure that the client understands what they are buying from the installer. And of course, through all the process, we are making sure it's properly done by the client. At the end of the day, clients are, like, it's a financial decision for them because they are transferring from their pocket, from paying the utility for the solar loan. Like, because we have very strong unit economics for them. So that's our collateral, basically. We have done a lot of guarantees financially as well, like to ensure, but that's the main reason. Yeah.
No time for more. Thank you very much.
Thank you.